Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the latest news updates for SoFi Technologies and where their SoFi stock price is headed. In this video, we are going to be analyzing 3 articles. The first one is a very bearish negative article where this author tells us that there is another reason to sell SoFi Technologies and how its rebound potential really isn't that impressive. So I will be responding to these very bearish negative comments from this particular author, and of course I will give my personal opinion. Then we're going to move on and we're going to talk about how Galileo, which is a company that was acquired by SoFi Technologies, has recently landed a Visa ready certification, which is absolutely phenomenal, which should reflect very positively in the SoFi stock price, because as Galileo becomes more accepted and gains more certifications and momentum, particularly from such an amazing company as Visa, this is going to be very good news for both of these companies. And then lastly, we're going to be going over an article that tells us when SoFi Technologies is set to have their overall earnings report. So we're going to be going over their earnings as well as the revenues that they are anticipated to bring in for this upcoming earnings report on November 1st. So for more news update videos on SoFi Technologies, remember to go and smash that like button right now. Comment your thoughts down below on any of these 3 articles that we will be analyzing today. Subscribe if you are new, and without further ado, let's jump right into today's stories. So if you didn't know, SoFi Technologies is a fintech company, or a financial technology company, that offers their consumers an all-in-one inclusive digital app which gives them access to various financial services and products. Right now, the SoFi stock price is trading for around $5.09, while professionals do believe this company is undervalued right now because, according to them, it should be trading between $6 and $11. So clearly, the company is somewhat undervalued. However, this particular stock author, which we have analyzed in a past video, who's very bearish and negative about SoFi Technologies, he's a big critic of this company, says that the company is way overvalued right now. So why does he think this? Well, if you recall from the last article of his that we analyzed, he provided 2 key reasons why he thinks investors should sell SoFi Technologies and not be buying it. The first reason he put forth to sell SoFi Technologies is that he says that investors are overestimating the impact that the student loan moratorium ending will have on their overall revenues. And to me, that's not a reason to sell the company. If not, even if the catalyst is not as impressive as we originally thought it was going to be, still, nonetheless, they are going to experience an increase in revenue due to the student loan moratorium ending. So I don't think that is a reason to sell this company at all. If anything, you could argue that it's a reason to hold the company. The second reason that he points out is he says that the company is taking an extraordinarily long time to reach their earnings forecasts, and how their long-term earnings forecasts are not impressive by his view, and that SoFi Technologies still has a lot of risk involved investing into this particular fintech company, which I do agree with him on that particular point. I do think this company is a rather risky growth company, but again, I think the risk to reward ratio is definitely warranted here as long as you don't overexpose yourself to this company too much by adding unnecessary risk. And for me personally, I only have around a 4% allocation to this particular company because I don't want to endanger my portfolio of overexposure to this particular fintech stock. The critic in this article actually goes into detail about a third reason why he believes you should sell SoFi Technologies, and I just disagree with him mainly on all of his points, but particularly his third point is that he believes that SoFi, as the stock price drops and the market cap lowers, he believes that this company could be bought out or taken over by another company, because he says that many early stage companies have been taken out or bought out by their more established rivals. And this would mean that companies like JP Morgan or Bank of America may want to buy out SoFi Technologies due to the increasing competition. And as SoFi's stock price becomes cheaper and cheaper, it becomes more of an ideal opportunity for various other banks or even larger fintech companies to buy out this company. So let's take a closer look at this particular quote-unquote reason to sell the stock in his opinion. He starts off very positive, saying that through continued growth and consistent profitability, SoFi could become a full-fledged growth stock, meaning that the stock price is going to be worth much more in the future than what it's trading at today. And I 100% agree with him on that particular comment, because I do believe the future stock price is going to be substantially higher than the current stock price. However, he says that's not going to happen for the next several years, and again, I agree with him, which is why I'm a long-term investor. He also correctly points out that SoFi Technologies isn't set to become positive in their earnings until 2024, according to current forecasts by professionals, and he is spot on with that current metric, which is why I'm trying to accumulate shares at the cheapest price point possible right now before they become positive by 2024, because that's when the stock price is set to surge. Now, he does follow this up by saying that the current negative macroeconomic environment is causing the SoFi stock price to tumble, and it could continuously drop in their share price over the next 12 months, which is very plausible, which is why he sticks by his tangible book value price target of only $3.34, and I agree to disagree with him here. Yes, technically $3.34 clearly should be the floor for this company, but growth companies naturally trade at a higher ratio and more inflated multiples due to this being a growth company. And I actually think this works against him, because if the floor of this stock is only $3.34, that means the current stock price of around $5, just $1.26 more than this price target, I could argue that the current stock price of $5 is somewhat undervalued, and that there is substantial upside still left in this company. But what else does he say about this company? Well, he says back in 2019 that Charles Schwab tried to take over and buy out SoFi Technologies multiple times back when SoFi Technologies was a privately held company. So clearly, an institution, a very prestigious financial institution, sees great potential in this company, and they were willing to buy out SoFi for as much as $10 billion, which is over 2 times greater than the company's current market cap, which currently comes in right now below $5 billion. Also, I want to say that even if this was a reason and is plausible, this is not a reason to sell the company by any means. And even if this were to happen, the board of directors and shareholders would also have to support this decision. And I just don't think investors would get on board with that. And lastly, the author highlights that investors who believe that the stock price will short squeeze should think again, and how it's not very likely that the company will short squeeze, but he doesn't really provide any evidence for this. He just says that the share price is going to move lower and lower over the next 12 months, which I can actually agree with him on. So he says that it's best to avoid SoFi Technologies, and that in Portfolio Grader, they rate this stock as a D rating, which is a sell rating. So overall, I really just don't agree with him on basically any of his 3 points to sell the company. They really just don't make any sense, and if anything, these points would just verify that we should either buy or hold the company. For instance, we have the student loan moratorium ending. That's a huge catalyst, which he says is going to work against the company because investors are overestimating its ability to bring in revenues. Secondly, he says that you should sell the company because the company isn't set to become profitable in 2024, but clearly we would want to acquire shares at a cheaper price point before the company becomes profitable and surges in their stock price from thereafter. And then lastly, he says that the company could be bought out by a much larger financial institution. But again, this just gives more bullish momentum to me, because Charles Schwab tried to buy the company for $10 billion, but the board of directors shot it down. Why? Because they believe that the company intrinsically is worth more than $10 billion. And with the current market cap trading below $5 billion, easily this company could double our money at minimum. So no, I don't agree with him on any of his points in this article, but I would love to hear your thoughts down below, which is going to lead us right into our next article, which is where Galileo, which is an issuer processor platform, has received a Visa-ready certification. So Galileo Financial Technologies, which is a leading financial technology company, which is owned and operated by SoFi Technologies, they've recently announced that it has become Visa-ready certified to deliver to its customers payment cards as a service API, which is absolutely amazing. The chief revenue officer at Galileo had this to say about this amazing certification, and I quote, "Galileo continues to expand the financial frontier by creating frictionless digital-first experiences. By becoming Visa-ready certified, we are solidifying our next-gen digital and core banking platform." So clearly, Galileo is making some moves, which is thus going to reflect very positively on the parent company of SoFi Technologies. And by becoming Visa ready, this gives them a large amount of exposure to a giant payment processing company, where it opens up the opportunities for Galileo to continuously expand their suite of payment products and various financial services that they offer consumers. And Galileo is not trying to target everyday consumers like you and I. This company targets other companies to sell its technologies to, and then that company will use their technologies while also paying Galileo for their fantastic innovative technologies. In the end, this is a great move for Galileo and ultimately SoFi Technologies, which is going to lead us into our last article that we're going to be analyzing, which revolves around SoFi Technologies' approaching earnings report, which is going to be released on November 1st. So we're going to see if this is going to operate as a catalyst for this company, and I actually think it will. So I'm pretty bullish on this upcoming earnings report, but why? So SoFi Technologies is set to release and report on their third quarter earnings on November 1st at around 7 a.m. Eastern time. And then after that, there's going to be a conference call at 8 a.m. Eastern time. But what are the current projections and forecasts that we can expect from SoFi Technologies' earnings per share and their revenue? Because if we know, or at least have a good guess on their revenue and earnings per share, it's very likely that we could predict the current stock price and how it's going to react either to this very positive or negative news. And for me, I'm more on the positive side despite macroeconomic uncertainty. For instance, let me quote directly from this article where it says, for quarter 3, analysts expect SoFi to bring in revenue of $392.76 million, up 56% year over year, and an earnings per share, also known as EPS, loss of 10 cents. The article goes on to say, the highest revenue estimate for the company sits at $414 million, while the lowest rests at $381 million. And I just want to interject here real quick in this quote, and even if the low-end revenue estimate is true at only $381 million, I still think this is a phenomenal increase and year-over-year CAGR in regards to the revenue, which should make investors very happy. The article goes on to state that for earnings per share, the high estimate is a loss of 9 cents and the low estimate is a loss of 13 cents during that same time period. And I also want to say that last year, during the exact same period of quarter 3, SoFi only brought in $251.57 million worth of revenue and a loss of 5 cents per share. So although this is not going to reflect very positively on their EPS, their revenue is substantially higher, especially if we compare last year's forecast of only $251.57 million to the low-end forecast of this quarter of $381 million. So clearly SoFi is going to receive a major boost from this after the earnings report on November 1st. Also, like we mentioned, a huge catalyst is approaching for SoFi Technologies at the end of this year. So you're going to have a pretty small catalyst in terms of their quarter 3 earnings report in November and on November 1st. And then at the end of December, on December 31st, that's when the student loan moratorium is set to end, because that's when President Joe Biden and the Biden administration said that the student loan moratorium will officially end, which will drive revenues of SoFi Technologies a lot higher as former students look to refinance their loans through a third-party refinancer such as SoFi Technologies, because originally SoFi Technologies was solely a student loan refinancing company, and Bank of America, particularly one Bank of America analyst, has identified this great trend, and they believe that the company will surge up to around $9 over the next 12 months, which is fantastic news. Also, for future guidance, we even have quarter 4 earnings results and forecasts that the company will bring in on their earnings report after quarter 3, where they anticipate the company will bring in $431.74 million worth of revenue, and an EPS, which is their earnings per share loss, of 9 cents. That would mean for the full year of 2022, they would have brought in $1.5 billion, which equates to a 48% year-over-year CAGR, which is substantially higher than our 30% metric, because if you are a long-time listener of this channel, you know that we want to identify companies that are trading at close to a discount that are growing at over a 30% or maybe just a 30% CAGR over the next couple of years, and SoFi Technologies clearly meets that criteria. They are rapidly growing. I also want to mention that for the full year, their earnings per share is supposed to come in at a loss of 44 cents, but again, we're not supposed to see positive earnings per share until 2024, so we still have a lot of time on that. Now, to compare this with what they brought in 2021, for that particular year, the company only reported $1.01 billion worth of revenue and an earnings loss of $1. So clearly they are improving. Year over year, this company is growing extremely rapidly, both in their earnings per share as well as their revenue. I am very excited for the future prospects of this company, and I cannot wait for the student loan moratorium to end so we can get a couple quarters of SoFi Technologies back in full swing, where they are refinancing people's student loans, which should cause the stock price to surge at least to $9, according to a Bank of America analyst. So I would love to hear your thoughts down below. Remember to go and smash that like button for more videos just like this one on SoFi Technologies. I hope you're doing well, stay safe in the market, and I will see you in the next YT video.